Let's bring in David Zervos from Jefferies and iCapital's Anastasia Amoroso. It's good to see both of you. David, how surprising of a number was this to you?
I don't think anything surprises me with inflation data anymore, Sarah. It's hard to predict. I think the Fed hasn't got it right. The street really hasn't got it right. A few people were calling for big inflation last year and did get it right. But really, I think we're all flying a little bit blind. The one thing we do know, Sarah, and this is the important thing, is the Fed is really interested in kiboshing inflation. And they're going to keep going, and they're not going to declare victory early. And I think the market keeps getting ahead of itself and thinking that this Fed pivot is somehow just around the corner. And they're telling you it's not there, but the market just wants to believe it and gets itself all, excited. And then a little disappointment comes in and you get a day like today.
Well, I think the market wants to believe that inflation has peaked and is coming down and the economy has not weakened so substantially that maybe there's some hope of a soft landing. Does that go out the window today, David?
I think it's more than that, because I think the Fed is trying to tell you that even if we get some good data, they're not going to declare victory early. They're very concerned about getting it down and keeping it down, and they're very nervous that this is something that could infect the anchoring of long-run inflation expectations. And I think the market's getting too excited too early. That's been a theme for us. The upsides are very limited. The downsides are risky, but I'm still not in the kind of cataclysmic downside camp, because I just think nominal GDP growth is gonna keep stocks from really taking a big swing lower. But we're going to get these violent upswings and downswings as people shift their sentiment too quickly for a Fed that's not really shifting anytime soon.
So Anastasia, what's it going to mean for stocks? Because we were in this period where it was hard to be too bullish and it was hard to be too bearish, because the inflation indications looked like they were coming down, and even though the Fed was talking tough, now we get this new number, hotter than expected. What do you do?
Yeah, Sarah, I think we have been stuck in this broad trading range, and I think that's not likely to break anytime soon. My interpretation of this report, the CPI report, it is a stunner, and it's going to be quite problematic for the Fed. And the reason I say that is, first of all, they're going to look at the month-over-month figures, and they're accelerating, not only in the headline, but also on the core. That is a huge problem for the Fed. And then the second thing, if you annualize these monthly figures and you look at the CPI basket, 70% of it is growing or increasing in price at 4% plus. So the Fed is going to take a look at this, and I think it is going to be a bit of a narrative shift, narrative change, because today they thought they were doing enough to fight off inflation and to crack down at it and still have this possibility of a soft landing. But I think what they're ultimately going to come out and say, looking at the CPI number, is that we probably can't have it both. We can't have it both ways. We can't have a soft landing and crack down on inflation. So they might need to go further in terms of rate increases, and they might need to stomach not a soft landing, but something else. So that, of course, is problematic for the stocks. And I guess my advice to investors is we're in this time period of uncertainty, unprecedented, fight against inflation. The Fed is very keen to fight it off. And what do? We don't fight the Fed. So I wouldn't expect much from equities in terms of breaking out of this near-term range. And by the way, Sarah, cash by the end of the year, we could be looking at 4% yields. So relatively speaking, investors are going to be making trade-offs between cash and equities, and cash and bonds are increasingly going to look more attractive.